gentleman. He's the author of the Remote Control Retirement Riches. He's been doing this for a long time, 40 plus years, and he's just a dynamic speaker. He's lectured globally. He has a TEDx talk with over 1 million views, and now that you've listened to this, it's going to be 2 million because of the 2 million listeners that we have today. Adiel, welcome. How are you, sir?
Hi, Dan. It's a pleasure to be here.
All right. So, single family homes. I know we were talking, I just want to let the listeners like the behind the screen, behind the scene. We were just having a conversation and I was asking Adiel about we were prepping for the conversation, and you have so much freaking passion for what you do. I'm like, whoa.
Oh,
Calm that
stop it.
passion down. Let's keep that for the show. Adiel, before we talk about, why single family homes are the ultimate wealth building tool, give us a little background about yourself. Where were you born? Where were you raised? Let's go way back.
Yeah,
Tell
yeah.
us, where were you born? Where were you raised? Give us a little background.
Yeah, and my background leads to this, so it kind of dovetails very well. I was born, in Tel Aviv, Israel, actually to a family of real estate developers. But as a little boy, I didn't care what my family did. I just wanted to play. But still, you can't not, absorb what the family talks about around the dinner table. And there are two messages that stuck. Both of them were accompanied with the following hand motion. One was, why didn't we buy these homes 10 years ago? They were so cheap we could. And the second one is, why did we sell these homes 10 years ago? We should have. Okay. So I kind of left my childhood figuring, okay, you need to buy and you need to hold. All right, fine. I came to the US to finish up my graduate studies in Silicon Valley. I was at the university. I taught at, the university. And then I got my first job in Silicon Valley. So
When
here
what time period? What year are we talking? A
I
ballpark.
finished my grad school in 1983. That's 41 years ago.
All right.
So, and I was an old student because you go to the military and I traveled, the world for a few years. Anyway, so here I'm a young man. I get my first job in Silicon Valley. Now, back then, there was no Google, no Amazon, no Meta. So where did you really want to work if you could? Hewlett-Packard Labs in Palo Alto. That was the place. It was right near the Stanford campus. So I got a job there, luckily for me, and I could bike literally to work and to the campus where I was still doing a lot of research, just bike. So two things happened when I got that first job. Number one, they paid me so much more than Stanford did when I was teaching there, so much more. It's like today when a young guy or girl gets a job at Google, they say, whoa, look at my salary. Yeah, same thing, exactly. So that was one thing. The other thing was, even though I was young, in my group, there were some researchers that were in their 50s and 60s. And I thought to myself, they must be really wealthy. If they've been here for 30, 35 years, this kind of salary. And then when I got to know them, they weren't wealthy. They owned their own home and a 401k. That was it. I said, there's no way I'm going to work here for 30 years and look like this financially. So I said, okay, I remember my background. I will start buying real estate to build an empire for me. And then I discovered something that completely blew my mind. I discovered that there's one country, as far as I know at least, in the world, that country's name is the United States of America, where they give you the biggest financial gift that exists. And it completely blew my mind. And the name of the gift is very well known, but surprisingly to me, nobody was recognizing that it was an amazing gift. The name of the gift is the 30-year fixed rate loan. So to illustrate why it's an amazing gift, these days I sometimes speak in Europe. So when I speak in Europe, I tell them, my Americans can get a loan called 30 years fixed. They say, what does that mean? I said, well, like the name implies, the monthly payment, principal and interest is always, it never changes with anything, inflation, the cost of nothing. And the loan balance, which keeps going down with the payments, also doesn't keep, they say, the Europeans, say, you are wrong, you don't know what you're talking about. I can't believe that I drove 100 kilometers to hear you speak. That's complete nonsense, impossible. And we'll prove it to you with logic, they say. Say, you have inflation in the US, right? Right? Sometimes low, sometimes low, sometimes high. Yeah, yes. So 40 years ago, when you bought a postage stamp in the United States, it was 4 cents. Now it's 72 cents. Normal inflation, right? 40 years ago, you went to the movies in San Francisco for $2. Now it's $15. Normal inflation. If you go to Whole Foods today and you buy a beautiful organic avocado, it's going to be $2.25. You know, we know, everybody knows. In 10 years, very likely it's going to cost $4, right? Very normal inflation. You want to tell us that in this kind of an environment, somebody is going to be moronic, stupid, idiotic enough to give you a loan that will essentially be the only thing in the US economy, never to change with inflation while everything else does. If that were true, that would mean
the price of the real estate, right?
Including everything.
Yeah.
The avocado, the tomatoes, the rent, the houses, the shoes, the glasses, every single thing except the mortgage. If that were true, they say, inflation would become your very best friend. People are afraid of inflation. In this case, not only is real estate is an inflation hedge, no, you have a loan that inflation is rendering smaller and smaller in real dollars every year. It's a miracle. It would be too much of a gift, too good to be true. The lenders would have to be crazy. Ergo, you don't know what you're talking about. That's what they say. So then I say, okay, how about you do a little search? They do it. What? You really have that insanity? The next question is always the same. How come the Americans don't drop everything and run to get as many of those gifts as they can, because it'll make them rich? My answer is no idea, but I sure did. So the reason I'm not retired, because I've been doing it for 40 years and I could have been retired for probably maybe 25 of them, is I have a message. The only American that understood this before I talked about it is Warren Buffett. He and I were in touch in 2012. He wanted to buy 70,000 homes for Berkshire, but he said, I gotta put 20% down payment on each home and get a 30-year fixed rate loan. In fact, he's the only American I ever met that from the get-go talks about it. And in an entrepreneur magazine, they wrote an article about my interaction with him. And to this day, you see, if you search, once in a while, he praises the miracle called the 30-year fixed rate loan. So then I discovered this when I was young at HP. I said, oh my God, I gotta buy as many of these homes as I can. So back in the 1980s, which when I was doing it, there was a saying that became an unwritten rule: only buy real estate within 30 minutes drive of where you live. Never more, only 30. And everyone was doing it. So I did it too. I was a good zombie, just like everyone else. I was living in Palo Alto, California. I was buying in Silicon Valley. I bought in Sunnyvale, in San Jose. But very quickly I realized I couldn't build an empire in Silicon Valley. Because even in the 1980s, although the numbers were much lower than they are now, the bad ratio between rent and price was still there. The rents were too low. So I said, my God, in order to really keep doing it, I need to break the 30-minute rule. Luckily, well, of course, back then, I didn't have the web. It didn't exist. And Sergey Brin and Larry Page were in kindergarten. No search for me. But luckily, I had my lab at Stanford where they had the ARPANET, the precursor to the internet. And with a little search, I found out that if I flew about an hour and a half from San Francisco, I would land in a smaller city by the name Las Vegas. That was the name. It still is the name, actually. And then I saw that I could buy homes in Vegas that cost about 1/4 of the Silicon Valley price. But very surprising to me was the rent was closer to 1/2 of the Silicon Valley rent. I said, whoa.
So you double in that case, right?
I started to travel every weekend. I always looked younger than my age. Back then, I looked like a boy. The people in Vegas had never seen anyone buy far from home. So they were sure I was just going to waste their time. So I spent the first couple of months looking for a property management firm, because obviously if I were to live in Palo Alto, California and buy homes in Las Vegas, Nevada, I would need local managers to handle my homes. So after a couple of months, I found a management firm that I liked. I still was very nervous because I didn't have a chance to test them in the field yet. And then finally, a realtor took pity on the crazy boy and said, okay, I'll find you homes. And I started buying. Now, to be fair, back in the 1980s, things were a little bit simpler than now. For example, Fannie Mae didn't have a limit of only 10 loans per person. They had no limit. Number two, you could have bought a home by taking, if it had a VA loan or an FHA loan, you literally signed a one-page document and took over the existing loan. Subject to, it was called. That stopped in the early 90s, but I used it quite a bit. So I was always pretty aggressive. I bought 22 homes in my first year. Now, before people get impressed, I want to be fair. The average home I bought in Vegas cost $39,000 for the whole house.
This was like 83, you say?
This is 80. I started buying in Silicon Valley, in 83.
Okay.
I got to Vegas in about, 85.
85. So what would 39,000 be equivalent to today?
Well, I can tell you that out of the 22 homes that I bought in my first year, I still own 7.
Okay.
And they're worth an average just under 300,000 right now. So, it wasn't hard to buy 22 homes, because if they cost 39,000, back then I could put only 10% down with PMI or private mortgage insurance. And sometimes I would assume an existing VA or FHA loan with literally $1,000. So it wasn't hard financially to do, but I never met anybody who bought 22 homes. So I was like, whoa. My friends in Silicon Valley made unbelievable fun of me this whole year. What are you doing? What about the 30 minutes rule? Why, are you crazy? You're leaving the state? No, it's not going to work. Well, after a year when they saw me with my 20 plus homes, the logic of the engineers from Silicon Valley worked, and they said, you know what? We like what you do. We want to do it too. I said, you should go do it. It'll change your future. They said, listen, you know how busy we are. You work here too. You already have your homes and your manager. How about you lead us? I said, okay, I'll lead you. So I led a group of maybe 20 engineers, and over something like 3.5 years, we bought about 250 homes. Not as a group. She bought 6 homes for herself. He bought 4 for himself. I bought a couple more, but I made a very trivial discovery that even the very cautious engineer who bought just one little home as a little test enjoyed the clout, the power that comes from 250 homes. Because the service providers, notably the managers, knew if he wasn't happy, he would complain to me. And I'm not happy, and every other manager in Vegas says, come to me, I'm cheaper, I'm nicer, I'm taller, I'm prettier. Who doesn't want to manage 250 homes, plus the many more we may buy in the future? So now I liked it so much, it was so much more fun than my tech life. And then I started getting invited to speak about it, because it was so radical back then. So in one of the lectures in San Francisco was a large investment group. I'm speaking, and unbeknownst to me, there is a reporter for the San Francisco paper in the room. Sunday paper, huge article. Then I get invited to speak on the NBC network, the morning news. I said, you know what, I like this so much more. I quit my high-tech life, formed ICG. And then if we jump to the present, I've been doing it for 40 years, essentially My investors bought more than 10,000 homes in about 30 markets, but the principle remains the same. Just today, we have markets where we bought 1,000 homes or 2,000 homes. So even an investor who comes in and buys one little home enjoys the clout of 1,000 homes. And it's the same thing. Now, why homes? Why single-family homes? Because I began our conversation by stating that the biggest financial gift that I know is the 30-year fixed rate loan. The 30-year fixed rate loan is only given on 1 to 4 residential units. That's mostly single-family homes. Because if you want to buy in good areas, Dan, let's say you and me are driving in a car. We're talking, having a great time. We are driving through a leafy suburb. What are we seeing? All single-family homes. We want to see duplexes, fourplexes, or we need to go to another part of town. And it looks like it. Hundreds of them. Maybe, so it's usually single-family homes, but good area duplexes could also work. But the reason I don't go to 5 units and above is because you don't get the 30-year fixed rate loan, the biggest gift in the universe. So, what does this gift look like? So here is a typical story. I have a good friend who was, a doctor, an MD, well paid. He started buying homes with us. He bought just one to see that the manager really did all the work because he was a busy doctor. It worked, so he bought another one. He got the message about the 30-year fixed rate loan. So he put the minimum down payments to get the biggest loans, also to stretch his money. So he ended up buying something like 21 homes, I think it was. 21 homes. He bought them in his early 40s. He calls me up when he was 55 and he says, okay, I looked at my 19 homes. Even though I started out with a big loan because I put a minimum down payment, after 13 years in this case, my loans are all just about a quarter of the value of the homes. That's what inflation does to a fixed rate loan that never changes while inflation keeps raging little or much all the time. So he said, first of all, I was super happy because on 21 homes, I had millions of dollars in equity. That was amazing. And then I took 5 of my 21 homes and I sold them. I didn't do anything fancy, no 1031 exchanges, nothing. Sold, paid my tax. And I used the proceeds from the sale to pay off the small remaining 16 loans. And with 16 free and clear homes, I retired from being a doctor at 55. Thank you, thank you. And then he said the one sentence everyone always says in the future, I should have bought more. Even I say it, and I bought a lot. I say it. So,
I was wondering why you still only have 7 of the 19 in Vegas.
No. I bought 400 homes for me over the 40 years. And I still own maybe around 150 of them. So some of the Vegas homes, I learned over the first few years of doing it that I only want to buy brand new homes. Many reasons. I have an article I wrote for an investment magazine. If somebody wants to get it, I can send it to your readers. And so the first few homes in Vegas I bought were not like that. They were old. So, I only kept 7 of them, but I certainly have much more than 7.
I mean of the 7 of the 19, but what areas in the country are your 150 or were your 400?
So, every bit of stuff that we're talking about here, I cover in an article that I wrote for an investment magazine, which I'll be happy to share. But where to buy, to me, I've been a student of the demographics in this country for decades. And to me, the demographic flow, the growth goes to what I call the Sun Belt states. The Sun Belt for me is Nevada and Arizona, Texas, Oklahoma, Louisiana, Alabama, Georgia, Mississippi, Florida, like that. I don't buy in the Midwest or in the North. So that's number one. Number two, I like to buy in large metropolitan areas.
Why for the Sun Belt? Before you move on, please.
Because even from the census alone, you can see the demographic flow is the strongest to the Sun Belt states. Not to mention, many of those states, unlike New York and California, are very pro-business, they're nice to the landlord, unlike, some other states. So Sun Belt states, large metropolitan areas for economic diversity, job diversity. I like to buy in the suburbs, families with kids that go to school. Each kid is like a root that's being put in the ground, and brand new homes. So now we bought more than 10,000 homes in Las Vegas, in Phoenix, in Dallas, in Austin, Houston, San Antonio, Huntsville, Nashville, Denver, Salt Lake, Atlanta, Tampa, Miami, Jacksonville, Orlando, all of those places. But today, most of these markets don't work. Why don't they work? Our biggest market, we bought more than 3,000 homes over 21 years, is the Phoenix Metro. Today, the Phoenix Metro is too high in price relative to the rents. It doesn't work anymore. So, today, those markets do not work. Vegas.
What markets do work?
The ones that do are the Oklahoma City market. If you look at the map, it's not far from Dallas on a US scale. It's cheaper than Dallas. The rents are close to Dallas. The property taxes are 250% less than in Dallas. Yeah. So the Oklahoma City market, we've bought more than 2,000 homes there over the past 21 years. 20 years. The Tulsa, Oklahoma market works. Mobile, Alabama. The most expensive market we're still in is Raleigh-Durham, the Research Triangle. That's not very far from you. And in Florida, the Orlando market is too high, but north, east, and south of Orlando still works, so central Florida. And we're always constantly monitoring which market is coming back, because sometimes when the rents go up or the prices go. So our next candidate, which may join us yet again, is Dallas. Yeah.
What makes you predict that for Dallas?
I constantly talk to all my teams in all of those markets. So looking at where the rents are going, looking at where in the state of Texas, a very huge negative is the enormous property tax, very high. But sometimes the rents make up for it, so it works. So, those are the markets. Actually, it's of secondary importance where you buy, because the primary thing is to get that magic 30-year fixed rate loan and then do the hardest action for a human being to do. Nothing. You wait. You let inflation do its job.
Yeah, and as you speak, I think I'm with I'm with that conversation with your parents in my life. Of man, I wish I didn't sell all those properties. I still have a few, not 150, but man, I wish I hadn't sold the ones that I've sold.
So my family used to walk around with dents in their forehead.
I appreciate you sharing your wisdom with us, Adiel. Besides what you shared with us, what else would you want our listeners to hear today?
Well, I like to make it count. I didn't retire because I want people to hear this message. And so in order to utilize it, you need to have property managers that are tested, local brokers. So we have an infrastructure in many markets where if you, let's say Dan or one of your viewers wants to come and you want to buy your first home, we will hold your hand, we will help you. You can buy that home. Of course, you can fly and look at it, which I like when you do. And then we will support you. And once a quarter for nearly the entire 40 years, we have a big event, which starting with COVID, we went to Zoom. So you can all join us. We shortened it, to 4 hours. And I bring the market teams to talk about their market. They show us what's going on in the market. They show us properties. I bring lawyers and CPAs. I take lots of questions. Great events. I don't charge for them. I want you guys to know. and you're all welcome to join. So to register, it's our website, ICGRE, under the events tab. And our last event was December 7th, I believe, and the next one is on March 1st.
2025. So that's the ICG conference. And somebody can go to www.icgre.com. Is that correct?
RE stands for real estate.
Thank you. And then go to the events tab.
Events tab.
Adiel, I really appreciate you sharing your wisdom with me today. I'm going to take this podcast and I'm going to share it personally with tens of thousands of people in my real estate sales business who I interact with there, to remind all of those people that I know, or throughout the 20 years that I've been selling real estate, that the 30-year fixed mortgage is a freaking brilliant thing and they should buy now. And if you're listening to this, I recommend that you do the same, particularly if you're a real estate agent, you want to share a value, you want to share an asset, something to help your clients with. This is the show to share. Adiel, thank you again. God bless you. Viewers and listeners, go to www.icgre.com. Go to the events tab, register for his upcoming free event, and have the best day of your life. Be grateful, make good choices, go help somebody, and God bless everybody. Goodbye.
Thank you, Dan. Bye-bye.
You're welcome.
Take care.